John Luskin, if Senator McCain wins tonight, you buy stocks tomorrow. Does it have any impact on your investment logic?
No, not really. I'm more looking at what's happening on the Democratic side. I continue to believe that Barack Obama is a deadly torpedo aimed at the U.S. economy, and if he turns out to be the candidate, I think he's electable. I think that would be a tragedy for the American economy. I would throw away everything else I believe about stocks and sell if I thought that was really going to happen.
Is he a bigger torpedo than Senator Clinton?
Oh, yeah, absolutely, because nobody really likes Hillary Clinton. I mean, she may get elected, but nobody trusts her, nobody likes her. The problem with Barack Obama is he's saintly. He'll go in with approval ratings that were like the ones that George Bush had right after 9/11. He won't just be a president, he'll be a saint. That's the last thing we need, because every liberal, anti-growth thing he wants to do, he'll just snap his saintly fingers and polish up his halo, and they'll get done. And that won't be pretty.
All right. Robert Schiller, do you want to take any exception to that attack on Mr. Obama?
Well, first of all, I like Hillary, so that he said nobody likes Hillary.
Don Luskin, you saw Mr. Schiller's very gloomy home price numbers, but you have been one of those arguing for quite some time that outside the housing sector, the American economy has done surprisingly well. And I want to ask you right now, are you still buying stocks?
I am buying stocks, and it's not only because the 7 quarters we've seen so far of housing decline have been the very best 7 quarters cumulatively for the rest of the economy during this expansion. The other reason I'm buying stocks is because of just the amazing performance that was turned in last week. And I'd be very curious actually to hear Professor Schiller's comments on this, because during the 80s, I think he did his very best work looking at the stock market crash of 1987, understanding the kind of crowd psychology that happens in events like that. What we had last week was a global panic set off by a single institution unwinding gigantic trades that were put on fraudulently on its books.
Societe Generale, the private French bank. So, Ed, was that a selling climax in your judgment, Don?
Well, yes, it was, but I think it's very interesting that as fragile as markets have been, when all of a sudden you get something like $70 billion of just out-of-the-blue liquidation in global markets, bang, 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 that was a chance for markets to absolutely rupture. And they didn't. Within 48 hours, they found a bottom and they came powering back. And what that's telling you is that that was all technical, that the fundamentals are there, that it's all really strong. And, Professor, if I may take over the show for 1 second, Professor Schiller, what do you think about that?
Yeah, Bob Schiller, what's your take on this Luskin hypothesis?
Well, I don't think Soc Gen is the source of all those declines. It wasn't big enough. This rogue trader didn't swing the whole world. I think that it was anxiety over the subprime crisis. Now, it seems odd that it would come on one day like that, but, you know, markets, we don't know what's going on.
It seems so odd as to be virtually impossible. How can that be? How can the subprime crisis have materialized all within a 48-hour period and then cured itself like that?
All right, go ahead,
Well,
Robert.
that's the way the markets work. I tell you, nobody knows what makes these markets move. October 28th, 1929, everyone has been talking. It's been 70 years since, and nobody knows what caused that to move, except,
Bob Schiller.